Have you ever seen a stock just explode out of nowhere and wonder how some traders manage to catch those moves? Well, it's usually not luck. It's a pattern. Today, we're going to do a deep dive into one of the most powerful setups out there, the Volatility Contraction Pattern, or VCP. And even better, we're going to tear apart a professional-grade scanner line by line to see how it hunts down these exact stocks.
All right, here's the game plan. We'll kick things off with the pattern itself. Then, we'll get into the guts of a breakout. After that, we'll talk about the hunt for strong stocks and decode the scanner itself. And finally, we'll cover what this tool really finds and how the pros actually use it. So let's start with the pattern that has literally made legends. The VCP isn't just some random squiggle on a chart. Nope, it's a very specific setup made famous by one of the greatest traders alive, Mark Minervini.
And if you want to know why people get so excited about this pattern, just look at this number, 343%. That is the insane gain Mark Minervini pulled off in a single year to win the US Investing Championship. And a huge piece of that strategy? You guessed it, the VCP. This thing is the real deal.
Okay, so what is actually going on inside a VCP? This isn't just about technical lines, it's all about human psychology. The pattern is like a movie playing out on your screen, showing a huge battle between buyers and sellers, where the sellers are slowly running out of ammo. The whole thing happens in stages. First, you get these big, wide, volatile swings. Then, things start to quiet down and you see smaller and smaller pullbacks. And finally, you get to the launch pad, the breakout point. Each step tells you something crucial about who's winning the fight.
So in the beginning, it's pretty chaotic. The stock is trying to move up, but every time it does, people who bought earlier start selling to take profits. That's what creates these big, messy swings. But what you can't see is that big institutions are often on the other side, just quietly buying up all those shares.
And then you get to this, the final and honestly the most beautiful stage. Look how tight and quiet the price action has become. Those wild swings are totally gone. This is the telltale sign. It means the sellers are exhausted. There's just no one left to sell. The stock is basically a coiled spring, just waiting for the slightest nudge to explode higher.
Now that all sounds pretty great, doesn't it? Just go find a stock that's getting tighter. Easy peasy. Well, not so fast. Here's where reality hits. Trying to find these things by hand is a nightmare.
I mean, seriously think about it. There are thousands and thousands of stocks out there. How in the world are you supposed to find the handful that are not only forming this perfect pattern, but also have the raw power to actually follow through? If you're just clicking through charts one by one, you're going to burn out long before you find anything good.
And that, my friends, brings us to the solution. A purpose-built scanner. We're about to go under the hood and break down a pro-level momentum scanner piece by piece so you can understand the thinking that separates the true market leaders from all the noise.
But before we look at a single line of code, you have to burn this idea into your brain. Amateurs go looking for cool-looking patterns. Professionals, they look for strength first. The pattern is just the cherry on top. A beautiful VCP on a weak stock that's in a downtrend? That's not an opportunity, it's a trap. This scanner is built to find strength above all else. All right, let's get into the nitty-gritty. The very first rule in this scanner is probably the most important one of all. We're only looking for stocks trading in the top quarter of their 52-week range. Just think about that for a second. The strongest stocks, the real market leaders, they don't hang out near their lows. They stay near their highs, ready to make new highs. This one filter gets rid of so much junk right off the bat.
And here's what that looks like on a real chart. See that? The stock is just chilling out, consolidating right near its peak. It's not falling apart, it's just taking a breather. This is the exact picture of health and strength that our first rule is designed to find. Next up, we add some common sense filters to clean up our list. We set a price floor and ceiling to avoid super cheap, illiquid penny stocks, and also stocks that are just too expensive to manage a position in properly. Then we cap the market size. Why? Because we want to focus on the small and mid-cap companies. That's where you often find the explosive, life-changing growth, not so much in the giant, sluggish blue chips. Now this next rule, this is absolutely crucial for making sure we're in a healthy trend. We're looking for what I call the golden alignment. The current price has to be above the 50-day moving average, which in turn has to be above the 200-day. When all three are stacked up like this, it's the textbook definition of a powerful established uptrend. It's a signal that institutions love to see. And finally, we add a couple of confirmation filters. We want to see a decent amount of daily volume because a breakout needs fuel. No volume means it's probably a fake out. We also check the RSI, which is just a simple momentum gauge. A reading over 50 tells us that right now the buyers are in control. It's as simple as that.
Okay, so we've put all these rules together and we hit run. What exactly does it spit out? It is so important to understand what a tool like this is really for.
Let's be 100% clear here. What this scanner does is give you an elite watch list. It hands you a small, curated list of stocks that are already strong, in an uptrend, and have plenty of liquidity. What it does not do is find the VCP for you. It doesn't give you buy signals. It just brings the best horses to the race. It's still your job to pick the winner.
And that brings us to the final and maybe the most critical part of this whole thing: how to actually use this information. It's one thing to have a great tool. It's another thing entirely to have the right workflow. This is what really separates the pros from the rest.
You know, there are really two ways to approach this. The typical retail trader finds a pattern they like, and then they just hunt for it everywhere, even on terrible stocks. The professional completely flips that on its head. They use a scanner like this to first find a small universe of only the strongest stocks in the market, and only then do they look through that list to find a low-risk setup, like a VCP. See the difference?
If you take only one thing away from this entire explainer, let it be this: a great trade does not start when you click the buy button. It starts way before that, with great stock selection. Most of the battle is won or lost before you even enter the trade. The scanner's only job is to make sure you're fighting on the right battlefield. So I'll leave you with this question to chew on. Think about it. A perfect entry on a mediocre stock is probably going to fail. But even a sloppy entry on a truly powerful stock can work out fantastically. So what's more important to your trading? Hunting for that perfect entry point, or making absolutely sure you've picked the right stock in the first place? Something to think about.